صدق الله العظيم.
Thank you, Maulana Sahab. Now may I request Mr. Venkat, our Group CEO, to take the event forward.
Good morning to all of you and hearty welcome. It's good to see so many of you this morning here. It's been a long time since we have last met. Some of you have changed the organization, some of them are continuing. Last Analyst Meet we had in Bombay, I think 5 years ago. While we keep talking to you post results and the investor call, we thought we should take some time off, invite all of you to the place like this, prestige city, Bombay, which was a year ago abandoned project. And if you see now the kind of action that is happening here, warm welcome. And we have with us today our Chairman and Managing Director, Mr. Irfan Razak, and our next generation from promoter family, Mr. Zayed Noman, Executive Director, Mr. Fayaz Rizwan, Executive Director, Mr. Jaggi Marwa, our CEO for Office Venture. Jaggi, maybe if you just say hello to them so that they know. And Tariq, Head of Western Region. Some of you must have interacted with him. We have Mr. Amit Moore, our CFO. Nayak, our Head of Accounts. Shamik Rudra, who takes care of corporate development. And Mr. Milind, who is construction head. I don't see Milind here, construction head for Bombay, and various other team members, Nadeem and Mohit, who handles investor relationship. So it's important for us to meet all of you. Therefore, the entire team, senior management and next generation, everybody is present here. The objective of this meet is to explain to you what we've been doing last 3 to 4 years, transformatory in nature, remarkable journey, thanks to our entire ecosystem, landowners, market outlook. We clocked some amazing numbers. The idea is to explain to you what's our game plan next 3 to 5 years from now, and expansion plans, business segment wise, cash flows, outlook, and give you the insights of what's happening within Prestige. I'll begin the presentation with a small video which captures most of our developments, completed once most of them, and some of them perspectives which are under construction. And then I'll take you to the presentation. After that, we'll have question and answers, and post which maybe walk to the site, which Milind and team will take care, and we'll end with lunch. That's the sequence of the event today. Can we have video, please? Thank you. And for us to see the kind of work that we're doing in each of the city, the management team is really, really geared up. One good thing is a lot of analysts must have changed the company. Some of them moved from sector to sector. It's the same team that you've been seeing for the last 20 years. So our ability to keep people, senior management people, with the organization, because they're all emotionally connected with the organization, growth, the story of prestige. And they're the ones who are doing this much of work, which is incredible. Quickly, let me take you through presentation now as to this is what we'll be covering in the presentation, who we are, what have we done in last 4-5 years, the growth story, each of the business segment that we are present in, what's the outlook and how are they doing. The Mumbai presence, most of you have been asking questions as to what are the projects that we are doing, what is the value of the projects, with whom are we developing those projects, and what's the product type. So therefore, we have a separate few slides on Mumbai presence. Outlook, opportunities and strategy. Where do we go from here? What's the market outlook for each of the segments? And what opportunities that we are foreseeing? And what is our strategy to capture those opportunities? And 3 to 5 years from now, where do we head? Prestige story, all of you are aware, 36 years into real estate, 12 plus cities. We'll add a few more cities in this year. And CRISIL DA1 rated developer, which stands for on-time deliveries with the quality and ability to pass on the clear titles. Financially rated A+, 165 million square foot developed so far, ongoing and upcoming projects. Right now, what you see in this investor presentation is 168 million square foot. In a way, to put it across in a different way, what we have done in 36 years, which is 165 million, right now we are embarking to do in the next 5 to 6 years. So that's the volume of work that we are doing. I mean, when we want to expand from one city to another city, there's always been a skepticism as to whether we'll be able to really succeed. Because in the past, there are many people who ventured into different cities, and real estate is not an easy subject because of the approvals, the land related, and customer dynamics. It's not easy to succeed. But what takes us from one place to other place easily is this won't change for the organization. We've been building trust, not buildings alone, for the last 36 years. We build the organization on these 5 pillars. Credibility, it's important for us. What we say is what we mean. And we have not in the past, at least I have been in the organization for 20 years, maybe except for 1 or 2 occasions, we have not revisited any agreement signed with any partners. Credibility, when we give word, when we say something, that's what it means. So credibility is what we build. Inclusiveness, it's not just all about us. It's about an ecosystem. It's about how do we take people along. That includes landowners, that includes contractors, that includes suppliers, our customers, bankers, investors. How do we make everybody part of a growth story? The inclusiveness. So it's, we feel otherwise lonely at top. In fact, Mr. Razak is here. There are many occasions where L1 is not the guy who gets the contract. It's not about numbers alone, it's about the relationship. It's about somebody's ability to deliver. I'm very happy to share that it's not about only our growth story. Along with us, there are so many suppliers, there are so many contractors who have grown to the next level of their business. It's about taking people along. Customer centricity, we exist because of our customer. They mean a lot to us. I mean, as we were told, we are the only developers. When we complete the project, we call all the customers and we acknowledge the presence of our suppliers, contracts, and everybody. Make it an event to celebrate and hand over their keys, because for us it may be a product, for them it is a palace. So we approach things with that mindset. Paramount for us, customer centricity. Transparency is what you see with us. There's nothing that is hidden. We don't say something and mean something else. We're transparent in all operations, everything that we do. The trust, that's the most important thing. The reason why we're able to expand to other geographies, collaborate, not just not compete. Everybody says there's a lot of competition. When there's a collaboration, there's so much more that can be done. Why do people approach us giving so many lands, so many opportunities, so many projects is because of the trust that we have built over a period of time. You keep asking how much of money we deploy in business development and projects. Honestly, much more than the money, what we deploy in reality is the trust. Trust has become our capital today because of our execution track record. And these don't change irrespective of city that we get in. Some processes, some methods of doing business will not change wherever we go. And we've been bringing those practices into those cities, and people are happy to adopt to whatever the processes that we are saying because they believe that we deliver the projects on time. Incredible journey last 5 years. Thanks to everybody who is part of ecosystem and supports and inputs from some of you who are sitting in here in the meet. My bankers are present. They helped quite a bit, the investors and everybody. Sales growth, if you look at last 5 years, 2019 to 2023, 4,500 crores of pre-sales. We moved to 5,400, and then last year we clocked 10,000 plus crores of sales, and this year we estimate to cross 12,000 crores of sales. As we speak today, as of end of January, we told in the Analyst Meet as well that we have crossed last year's number. So now, subject to launching one or two more projects, we should be able to cross 12,000 crore milestone as well this year. The collections are pretty much in sync with the sales that we are doing. We have registered 17% CAGR in collections. This year, total collections will be 9,750 crores. As of 9 months, if you see in the investor presentation, we crossed entire last year's collections already. So the sales are duly supported by collections. Some of you ask us, saying that, are we doing any bulk sales? Answer is no. We've been doing sales to most of the time end users, not even investors. 80% of our buyers want to stay in the properties. They go take home loans. And that's the reason why sales are supported by the collections. Otherwise, sales would happen, collections won't come. This has been in terms of unit sales from 4,221 units to 8,883 units last year. That's roughly 24, 25 units sold every day last year. And this year is even better. As of 9 months, we have done 7,200 units sold, an average ticket price of 1.3 to 1.5 crores. And the average realizations from 19 to now, if you see, have grown from 5,891 rupees a square foot to 8,155 rupees a square foot. In fact, residential alone, if you look at, it's little over 9,000 rupees. Because of plotted development as a mix, the average realization is at 8,155 rupees. The launches, if you look at from 19 to now, we've launched 75 million square foot plus launches. And I mean, there are people who asked us the pipeline, do we have enough to launch? I must tell you, the kind of opportunities that we get every day, we capitalize, or maybe we take up only 10 to 15% of what comes to us. So our ability to do business development is directly proportional to the kind of deliveries that we've been doing. So therefore, that's not a concern at all. 75 million square foot. In that, 51% of the projects are residential, 49% of the projects are commercial, retail, and hospitality. And next 3 years pipeline is just by going by our ongoing and upcoming projects, what we have in the list. The details are also there in investor presentation. This presentation also will get uploaded. 32 million square foot of launches in this year and next year. And FY25, the balance of the portfolio and new business opportunities that we are evaluating. As we speak now, in addition to the ongoing, upcoming, and land bank, we have 20 to 30 deals that have been under evaluation at various geographies. It's been quite transformatory for real estate. I mean, the supply consolidation is something which we have foreseen. Some of the growth that we've seen is linked to the demand growth, and major part of it is supply consolidation related growth. I mean, beginning with the demonetization, RERA implementation, which required developers to get a lot more streamlined, well-governed, wanting them to deliver projects within timelines. And GST, which required ecosystem also to have better practices. So therefore, they also need to grow to the next level. COVID and lockdown related, FY 20 and 21 predominantly the fear of COVID, lockdowns, workers not coming at the site existed. And of course, all of you know NBFC and liquidity related issues with many banks, I'm not taking the names, banks and NBFCs having their own internal issues and trouble. In spite of all this, our completions in last 6 years have been 80 million square foot. Is the deliveries that we had. From FY 18 to FY 23, if you see, from 84 million square foot of completions to 165 million square foot of completions is where we moved. So, that should give a lot of trust to our customers. That's the reason why we're able to clock that kind of numbers, that in these difficult times, if we deliver normal circumstances, we'll be able to deliver ahead of time. Case in point, some of the projects, if I have to tell you, Prestige Jindal City, 3,500 plus apartments. Prestige Finsbury Park, again 3,500 plus apartments. They got launched in the later part of 2019 or so. Jindal City has been handed over. Finsbury Park is ready to hand over. In these 3.5 years, 2 years went in COVID. But our construction did not stop. In fact, we're the first guys to get, even during that time, charter our laborers from Orissa, Bihar, West Bengal, and ensure that construction continues. Because of the commitments. That's why go back to the value system of credibility. We are given a customer. We can find excuses not to deliver. At the same time, we can go ahead in spite of the problems and deliver what we are committed to the customers. In terms of number of units, FY 19, 20, 21, 22, 23, we have few more projects getting completed. 26,000 plus units got handed over in last 4 years and this year put together. This is our growth in terms of, that accounting is primarily dependent on the completion method of contracts. It could be lumpy because in some years we have more completions, some years have less completions. This is how a growth in terms of revenues, EBITDA and PAT has been. And net worth grew in the last 5 years from 4,962 crores to 9,547 crores. And debt equity came down from 1.75 in FY 19 to 0.42. When the debt was going up, a lot of you had concerns saying that the gearing is very high, how are we going to bring down? We had told you saying that whatever money that we are taking, we are not using it for futuristic land bank, which will materialize after 10 years, 20 years. Every rupee was spent to create and build something, which is office, retail, and hospitality and all of that. It just required management to take one decision to unlock value and bring down the entire debt. Even today, I would tell you, the amount of debt that we have is minuscule compared to the kind of work that we are doing. It's just about taking a decision of one project not being ours and selling it out at debt will become zero. At 18,000 crores of market capitalization. So business segments, moving on, each of them, residential, commercial, retail, and hospitality. This is what I mentioned, the headlines. Ongoing is 75 million square foot, and which will get over in next 3 to 4 years. And upcoming projects, another 93 million square foot, adds up to 168 million. And the breakup of that is what you can see. So let me move on to residential. What is the outlook that we have? How do we see residential market? If you look at last 3 years, calendar years, data from PropEquity, launches have been 2,45,000 units, 3,24,000, 3,69,000 units. Absorption, calendar year FY 22, has been far higher than that of what got launched. That's why we also don't have much of stock now. The stock that we hold may be equivalent to 2 quarters. The key thing is going to be the launches, which we are working on. New launches at 14%, absorption is at 29%. Same is the case with office. We are back to where you used to be pre-COVID levels. 61 million square foot overall got absorbed in last year calendar year. So therefore, we are confident of leasing. We have good market share in commercial leasing market. When we go there, we'll get a little more details. But this is overall what happened in the industry, which is residential and commercial last 3 years. So residential alone, 21,000 units are right now we are constructing, ongoing 35 projects, 44 million. And this is a summary of, in terms of numbers, where does it take us considering ongoing and upcoming projects. We should be able to generate from both these put together free cash flows from ongoing projects 8,319. This year, if you see this quarter investor presentation, if you see, we have given developmental business the positive surplus cash flows that we have generated. And we have also guided you, considering the fact that the projects that whatever are in pipeline, translating them into numbers, FY 23, 24, 25, 26, 27, what kind of free cash flows that we can generate. 26,860, which is sum of ongoing and upcoming projects. We have not considered 10,000 crores of potential land bank that we have. After taking off overheads and tax, net free cash flows that we have would be 20,000 crores, which will come over a period of next 5 years. Out of those cash flows, we intend to use 40% of cash flows to deploy our share of equity into commercial, residential, and hospitality projects. So out of free cash flows, 40% goes for for contribution into capex projects. 60% will make use of for business development and other contingency related. This is how these are going to be used, and this is summary of cash flows. So this is a little more breakdown as to how did we arrive at the cash flows, which we also have given in investor presentations. Estimated value, total sales done, balance to collect, the stock of 9,648, and refundable deposits that we are given to landowner, which are in case of joint developments. All that constitutes our inflow, which is 20,525, and we have 12,000 crores of balance to spend money, and then we get free cash flows. Same is the case with upcoming projects, and from there we have reduced overheads and tax and arrived at the net free cash flows for giving you the ballpark potential of what these ongoing and upcoming projects hold. Again, just to give you the breakdown as to where these projects ongoing, upcoming are situated. Bangalore is 55%. Bangalore used to be 90% for us, for you to now, I want you to take a note that Bangalore has moved from 90 to now 55. Scale has not come down, just that other cities started contributing a lot more. Mumbai, Hyderabad, Chennai, Noida, they make up a major share. Top markets for residential and few others. So this is the breakdown of entire residential geographically. Moving on, commercial, ongoing are 26 million, upcoming are 15 million. Next level of office spaces that we are building, which are future ready, building in the architects from various different countries, all are ESG compliant and green buildings, and with a completely different kind of experience. So with ongoing and upcoming projects, no new lands need to be tied up, and rather the new lands that we're going to tie up are not part of this. It's as is right now. Our annuity can grow from 243 crores to almost 2,500 crores in next 5 years' time. This is the growth plan that we have, and this requires us to lease around 5 to 6 million square foot a year across the cities. And this is what we have as a balance to spend our share of construction. This chart summarizes for you what is our potential annuity growth and what's the money that we need to spend to get there. Total cost of construction of 15,459 crores. Our share of construction in that is 14,000 crores. Of that, balance to spend is 12,800. That will take us to 2,500 crores of sales. And the spend pattern also we have given you. This entire spend, as I told you, 40% of it comes from free cash flows of residential. The 60% will be bank debt. Again, so geographically, Bangalore is 24 million, Mumbai is 10 million, Hyderabad, Pune, Delhi, and Kochi. That adds up to 40 million. Well diversified portfolio. not concentrated in any city. 60% of it is in Bangalore, and 40% is the rest of Bangalore. Retail, ongoing 2 projects, 2 million square foot. Upcoming 4 projects, 5 million square foot. Relaunching of Forum brand. We opened on 1st of December the Falcon City Mall at the Falcon City, and I'm happy to share that it met with a great response in spite of all the shops not being open and theaters are yet to start the operations. We had little over million people, over 10 lakh people visiting in the month of December alone. So that's become now talk of Bangalore. I'm sure it's going to do well. The next set of malls that are going to come are also large in size. They are going to be experiential shopping malls, compared to what we've done in the past. If you see, the size of each mall is little over 1 million square foot. So we see the rental growth from retail segment from existing number to 535 crores in the near future. If you look at the amount that need to be spent, the total construction cost, PG share, will be 1,840 crores that we need to spend. And of that, some of it has been spent. The balance to spend is 1,613 crores. The annuity of PG share is 536 crores. If you look at both the capex, office and retail, our yield on costs are in the range of 15-16% to 20%. Retail will be on a higher side. Office is slightly lower. 16% or so is office, and retail is close to 19 to 20%. Those are the yield on costs, and these are to begin with. Every 3 years we have escalations, and retail we also will have additional incomes wherever we have the revenue sharing model, MG plus revenue sharing wherever we have. The locations, Bangalore 2 malls, Kochi 2 malls. One of it we just opened for the retailers. The public we have not opened, will open soon. Hyderabad is part of Prestige City. Chennai, 1 mall. Total 6 malls. Then moving on to the last segment, hospitality. We have 9 operating projects, 1,368 keys. Ongoing are 5 projects, 1,217, and upcoming 2 projects, 350 keys. All of you should have noticed in our investor presentation, the ARRs have gone up in hospitality. Their contribution to the overall portfolio is very positive. In fact, we only see in terms of growth, this sector should do very well because of domestic travels and staycations, destination weddings, because the hotel that we have in Bangalore, which is large in size, JW Marriott, our Prestige Golf Share, is being most preferred for destination weddings now. This is how we move. Overall revenue of 1,852 once we complete. Total 14,000, sorry, 10 is missing here. Balance to spend is 1,295, our share. Again, in terms of projects, if you look at Bangalore 2 hotels, ongoing and upcoming, Delhi, Mumbai, Chennai, and Kochi. Delhi 2, though it is only 1 project at Dial, some of you have noticed, is 2 brands coming, St. Regis and Marriott Marquis. That's how it's been told as 2. In addition, property management, which has got great potential. All the projects that we complete, we maintain and manage. That can give us the cash flows from 482 to 1,100 crores with the margins of cost plus, which is 20%. We do have a contracting arm which does 300 crores of top line, which has got order book of 1,300 crores. So in case any contractor whom we have given work to fails to deliver, our construction arm can take over and complete the projects. We manufacture backward integration. We manufacture doors, we do interiors, we have furniture. We also do glazing work. New business opportunities, we're looking at warehousing and logistics, low yield game. So that's why we're a little cautious. Data centers, yes, either to tie up, operate on our own is something we are deciding, but having said that, we have done one large deal with one of the data center operators recently, and assisted living. With this, the most important slide that all of you want to know a lot more about is our Mumbai presence. We've got 7 projects right now in Bombay. The Prestige City at Mulund, where we are right now. Prestige Daffodil at Pali Hill. Jija Mata Nagar at Worli, which is right now under acquisition and the cleanup. Prestige Jasdan Classic, Prestige Ocean Towers at Marine Lines, Prestige Nautilus at Worli. And 2 office projects, which is at BKC and Mahalakshmi. So this slide summarizes all the required information that you need for each of the projects. I have 7 slides like this. Prestige City at Mulund, all of you are aware, it's been a stuck project for almost 15 years. We picked it up in NCLT. Total almost 33 acres of area. 4 million square foot of carpet. We've launched so far 2.1 million square foot. Gross development value of this project is 9,700 crores. Launch date, Siesta, we launched in December 22. Belanza, we launched in May 22. I'm happy to share that recently somebody forwarded the report. I think this has been the top performing project in eastern suburbs. Current status, 36 level completed of 54 in Siesta. And Belanza, tower-wise, we have given you the breakdown. Prestige Trade Center, which is the building that we need to hand over to COC as per our understanding. Excavation completed. This is the summary of the Prestige City. Prestige Jasdan Classic, 2.1 acres of land, launched in Jan 22. Estimated completion date is FY 26. Carpet area of 0.33, gross development value of 1,500 crores. Right now we are in 1115 of 45 floor tower. The west tower is, we are in level 19 of 45 floors. EWS tower almost 90% completed. We're happy to organize visits to all of these projects at your convenience. I'll request Rajat and team. Any of you can reach out our Mumbai office. They'll organize for you to see. And that's a perspective. This is where we are, actual construction progress. Because common question that we keep getting from analysts and investors is will you be able to do the construction at the same pace as that you're doing in Bangalore and South India? In fact, this is a little ahead of schedule. Prestige Daffodil, 1 acre of land, launch date July 22. Estimated completion date because of site difficulties is FY 27. Shore piling work in progress, 0.12 million square foot, gross development value of 1,200 crores. Prestige Ocean Towers will be next quarter launch, FY 24 Q1. 4 years to complete, estimated completion. And 2.3 acres of land, carpet area of 0.45 million square foot, GDV of 3,400. Approvals are under progress and we'll start the work soon. Not least, we just signed development agreement. We launch in FY 24. Estimated completion is FY 28 for you to know where the site is. This is opposite to Oberoi 360. This again was a stuck project for a long time, which is a redevelopment project, which we have picked up, taking over, paying all the banks which are involved and signing the DA with the society. 3.6 acres of land, almost 1 million square foot of carpet area, GDV of 5,900 crores. And this is about BKC, 2 projects, 2 buildings rather. Earlier we used to call X and Y, now we are calling it BKC 101. 8.9 acres of the land, 4.45 million square foot developable area. What we've done is for you to equate and compile everything and give at one place. We have assumed the rentals of 325 rupees a square foot. We are paying right now so much of rentals. We have not considered the escalation to be more realistic. And applied a cap rate of 8.5 to arrive at GDV of 20,500 crores. This is Liberty Towers, 5.5 acres of land. Will be launched soon. 4 years to complete. We have commencement certificate, approvals in place, so we started work already. Again, we looked at 325 rupees of rent and 8.5% cap rate. That gives us GDV of 12,600. Now, just to give you a snapshot, Our entry into Mumbai happened 2.5 years ago. You've been asking in every call, separately when you speak to us or when you write to us, what exactly is happening in Mumbai. One slide snapshot. This is what is happening in Mumbai. This is exactly what we are doing. And for you to take note of. Prestige City, Mulund, NCLT, Jasdan Classic picked up from HDFC and NCCL. Jasdan is the brand. Jasdan was the landowner. That's why it's called Prestige Jasdan Classic. Initially, it was supposed to be joint development. Subsequently, we bought out the joint development partner, but we kept the name as Prestige Jasdan Classic itself. Prestige Daffodils, 1,200 crores. Ocean Towers, 3,400 crores, which we picked up from Edelweiss ARC. Prestige Nautilus, as I said, redevelopment, and we picked up from banks and the society. Prestige BKC 101, we picked up the stake from Island FS and Trinity, two stakeholders then existed, and the project was in NCLT. We approached NCLT and gave a resolution plan and bought out the stakes from both these people, Island FS and Trinity, who had 50% stake. Subsequently, we also increased the stake by buying something from DB share. Today, we are little over 75% of share in BKC 101 is by Prestige. And the Liberty Towers again. These two are the projects. And again, because you keep asking who is our partner here and how are we doing work, how many projects are with DB. These two are with our JV partner DB. And the remaining are all some things we have picked up in NCLTs and with banks we're doing on our own. So all these and Jijamata Nagar, which will take another 9 months to 12 months to make it ready in terms of plans, in terms of cleaning, etc., which holds a potential of 20,000 crores, which is 3 million plus square foot of carpet area for sale. For you to understand better, in the next slide, we have also given a breakup of how we arrived at the numbers. 0.33 sale value on carpet, 45, Prestige City Mulund, 24,000, Daffodils, the price at which we are selling, Ocean Towers, average pricing over a period of life cycle of project, Nautilus, Liberty Towers, applying the derived number the way I said, the rent and cap rate, and Jijamata Nagar. This is the breakdown. So how are we looking ahead in terms of industry, in terms of internally our balance sheet, what is the capex, how are we going to do capex funding, what's the P&L outlook? This is where we will be heading in 3 to 5 years from now. Entire organization is geared up in terms of pursuing opportunities, execution capability, management bandwidth, to take the organization to the next level in terms of pan-India presence. We are present in Bombay, we are not present in Pune. We'll be looking at, we are evaluating a lot of opportunities in Pune. Soon we'll enter that market. As you all know, NCR we have entered, we have signed a deal, but for lack of approvals, we have not been able to launch. But we'll strengthen our presence in that market. We'll take it to the next level. Now, please look at it. Our capex commitment, what you saw in earlier slides, for office, retail, hospitality, prestige share is 17,007 crores. And this is how we are going to spend that money year-wise, next 5 years. 40% of residential free cash flows, we said, will deploy into the capex. This is how the deployment is going to happen. We also will get lease deposits from the tenants, which will help us fund last mile of construction or to repay to the extent if we had borrowed also. The shortfall, 7,486 that you talk about, is the one which we are going to be borrowed from the bank to complete these projects. So therefore, our peak debt will move in the following fashion. 4,733, that includes existing debt. And then incremental shortfall, whatever is there, if we keep adding, our debt will move when we achieve 3,000 crores of annuity income and the hospitality incomes put together. Our debt will move to 11,000. Along with that, our net worth also will move from where we are to 24,000 because of increase in developmental business and the profits that we book. Eventually, our next 5 years, our projected debt equity ratio, maybe in a particular year, it may be at 0.63, 0.64. It will come to where we are just now. This is the cycle that we go through. And in our net worth, we are not counted anywhere all these numbers if you see. We have not counted the transaction that we are going to do from now to next 3-4 years and what cash flows those can bring in. We have not added that. But having said that, we have kept aside 60% of the cash flows of residential business for business development. That's not part of it. That's what I've explained to you. 40% will come into capex, 60% are kept aside for business development. So this is how 5 years from now P&L should look like. The incremental step up in terms of revenue recognition has to happen with the growth that we are seeing. Office, retail, hospitality, property management should contribute in the following fashion. The total top line of 30,000 with a EBITDA of 32% and tax a PAT of 4,746. This is the direction in which we are heading. Now, achieving to 25,000 crores of sales, before I get there. Now, this is the market comparison as to where are we and what PE multiples we trade at. 17,367 crores of market cap. 12 months trading multiples in terms of PE is 12 times. Price to book is 1.82. Our return on equity, you see in the presentations also, is 12.64%. The operationally, if you look at sales, we clocked the highest sales any developer has done last year and this year so far as well. And compared to numbers of all other developers in terms of multiples of PE, price to book, and return on equity is here for you to see. And we're happy to share that in terms of return on equity, in spite of the product mix that we have, the highest ROE is by us. And the lowest price to book is also by us. In terms of even trading multiples, PE multiples, that's the value that we hold in terms of stock. And with the expansion that we are going to have into NCR and Pune, two other good markets for residential, we will be one of the representative stock for Indian real estate as a whole. From an investor's point of view, some of the developers are Mumbai specific, some of them are NCR specific, but some of them may be Bangalore specific. But if you look at Prestige Estates, the way we are driving the organization is to make it as a representative real estate stock. So if you want to pick one stock and cover all the markets, it should be us. So 25,000 crores of pre-sales, 3,500 crores is what we have to deploy in the land because some of them are JD, some of them are outright buys. 11,500 crores will spend for construction. 25,000 crores will be the pre-sales number that we are looking at. How do we get there? 10,000 crores from Bangalore, 5,000 crores from Bombay, Hyderabad 1,000 crores, NCR 3,000 crores, Pune 1,500, Chennai 1,500. All other cities, which is Kochi, Calcutta, Goa, Mangalore, and Ooty, where we have projects, around 500 crores, around 1,500 crores. The number that you see in green right now is what is the contribution in this year. This year, we are doing 8,000 crores in Bangalore, 2,500 crores would be from Mumbai, Hyderabad would be 1,000. What you see in black is what we are looking at in 3 years' time, each city to contribute. So very realistic, 20-25% growth from Bangalore market. Mumbai, with the kind of offering that we have, to move from 2,500 to 5,000 crores. Hyderabad holds great potential. When we launch Prestige City, which is a large project, we'll be easily able to clock 2,500 crores number. NCR, we don't have presence right now. We have 2.2 million square foot of project, which is Prestige Bougainville Gardens, coming up for launch. And with 2 more projects, we should be able to, given the potential that market has, we should be able to reach the number of 3,000. Again, Pune, we don't have projects right now, but we are evaluating. Hopefully by March, we should have 2-3 projects in pipeline. Chennai used to do for us 1,500 to 2,000 crores in the past. Somehow, in terms of acquisitions and change of guard in senior management, we've not captured enough of Chennai market. But I think now with the kind of projects in pipeline, we'll get there. So this is how the mix of the number that we are looking at by FY26. Our journey, our efforts, and the drive is going to achieve these numbers. Key takeaways for you, no compromising in terms of values. These values is what drives all expansion. 22,000 crores of residential free cash flows that we have, in addition to 10,000 crores of land bank potential. Annuity business will grow from where we are to 3,000 crores. I have explained to you CAPEX funding strategy, how we are going to fund our CAPEX, and how our debt equity is going to move in next 5 years' time. Gross development value of projects that we are doing in Mumbai is close to 75,000 crores. And I want to add to that 4 more new projects in MMR region are under evaluation and consideration in Andheri, in Navy Mumbai, in Warsaw, and various other locations. We'll be able to close those deals by Q1. The portfolio will only become bigger and better and widespread with offerings across the price points and various ticket sizes. Expansion into NCR and Pune, already groundwork has been done. It's about now choosing on what is available in terms of deals. 25,000 crores of annual sales potential. This is where we're heading to by FY26. And Prestige City format, we'll take it to new geographies. Each Prestige City is a top line of over 5,000 to 7,500 crores, big in size. And we want to take Prestige City to all of the geographies that we are present in. With this, we come to the end of presentation. Thank you very much, quite exhaustive. I want you to understand in detail as to what we are doing, where are the cash flows coming from, where do we go from here, sales mix, how does the balance sheet look like and P&L look like. Thank you very much. I hope this has been informational and helpful to you in understanding organization better in terms of strategy, in terms of the way we are doing business. Thank you very much for your patient hearing. Thank you. And I request Mr. Irfan Razak, our chairman, to come onto the stage and share his vision and explain to you as to what drives him and how is he driving the organization next couple of years, and post which we'll have question and answer session with Sir and the management.
Good afternoon to everybody here. It's great to see so many that have come, taken out their time. Thank you very much for that. I think it's been an exhaustive presentation given by Venkat, and the entire team has worked on this and put this together. And whatever has been presented is not something that is just talking in the air. I would say it's pretty realistic and extremely doable. So we have some of our team members listening on, apart from all of you, and they know that all this is possible. When we entered Mumbai, there were so many questions. But now I think the only way to answer the question is action. Because you can keep talking. And the only way to convince the talk is to walk the talk, to do what we are doing. And I think the team is well equipped to do what we do. And this question of planning, focusing, making sure that whatever we commit, we get there. Yes, Mumbai also, we would have liked to grow a little more slower, but then these commitments are already there. And I think every commitment that we've taken, almost all of them, we are pouring concrete. Except for Jijamata Nagar, rest of them, the concrete is there. All the approvals are in place, including the 2 big office developments. And very soon we'll have some good news on that also, in terms of either occupancy, leasing, all of it. I don't want to say much more, because these are 2 very, very prime sites. The residential business in Mumbai has done well and will continue to do well. Prestige City in Bangalore got sold out in a matter of 1 year. That's 7,000 plus units of apartments, plus 800 plots that we did. The plotting business is good. Now we're getting ready and gearing up for Prestige City in Hyderabad. The approvals, last stage is happening. Hopefully we'll get March, then the 12,000 figure will go up. But if it doesn't get in March, hopefully April. Of course, there's always the next quarter, and the next quarter we have to leave it for that time. But the thing is, it's not about the numbers. Numbers will happen. Sometimes you have more numbers, sometimes it is less. It's about our vision. It's about what we are planning to do. It's about growing an organization. Like Venkat said, there are many of us who are in the company for many, many years. That's nothing else because it's their commitment, it's their passion. It's the passion to create. Now, Mumbai, we've created a completely new team. They're all passionate, they're all dedicated. Similarly, across the country, across every center, we say we need to have proper organic growth, and that's what we've done. And we'll continue to do that. And yes, macroeconomics do play a big role in whatever we are doing, especially real estate, and every single region has its own local nuances. We need to understand those nuances. And we recognize those nuances. We need to how to battle the entire environment that goes along with it. I think we've been fortunate enough. We are blessed by the Almighty that we have done it, and so far, because without the blessing of the Almighty, nothing happens, nothing moves. So it's a committed team who believes in that. It's a committed team that is working on it. Yes, organizationally, it's a professional setup, and it will continue to be there. On the promoter level, we have the next gen totally ready and completely committed and involved. And I see that this company will grow much more. And the only way to do it is to keep doing it. When we listed in 2010, it was a different story. Now in 2023, I probably couldn't even imagine that we'd come to this level. Now, I don't want to keep talking. I think the best thing is we want to hear from you, your thoughts, your questions. You'll have many, many questions. We are ready to answer them. With this, once again, thank you for having come here. Thank you for having had that patience to listen to us. And we do hope we were able to present a clear picture. Yes, while we are doing all this, the only thing is we have to keep working hard and praying hard that we reach the end. I've told this not only in our company, but whenever I go to any of our developers meet, as early as yesterday, we had a CREDAI convention for South India, for Karnataka. I said, the youngsters wanted some advice. I said, if you start a project, be focused on it, reach the end. Because if you complete, even if you have not sold, you'll sell it at the end because there's some buyer at the end. And of course, you'll get better prices. But the thing is, you need to tighten your belt, not overcome it, reach the end. Now, when we took this Prestige City, Mulund, it looked too huge, too big, too humongous. But I think after what we've done so far, it's given us so much confidence, and we believe that even the next phase, by the end of the year, we can launch that. Thank you again for being here. More than happy to take whatever questions. I'll invite Venkat again to the stage, and we'll start with the Q&A. Thank you. Okay.
Yash Gupta this side, sir. Sir, first question is on the Mumbai market. We have again seen the increase in the unsold inventory in the MMR market by almost 29% to 3.63 lakhs. Do you think in next 2 to 3 year absorption to increase significantly or the unsold inventory to come down?
Talking about Mumbai market?
Yes, Mumbai market, MMR.
Yeah, see, now we've had a good run. Like even in this project, whatever we've launched, I think we've sold more than 60% plus, apart from some legacy customers that we have. And I believe by the end of this year, with this inventory, whatever we have, we probably will run out of it. And then that's the reason why I said by the end of this year, we'll probably in a position to launch the next phase.
All in all, you are saying that we will keep doing better than the market? The inventory keep increasing and then we will be able to do better than the market?
I can't hear you.
So, do we think that we keep doing better than the market in MMR region, and if this kind of inventory keep on increasing, that may in future after next 1 or 2 year keep add some pressure to you also?
There's no pressure as such. This entire transaction also is skewed in a certain way that we have certain commitments to COC, and there's certain cash flows from this will go towards that way. There will be no cash flow coming in from there. But ultimately, the complete cash flow will come in the last phase of this project. Similarly, now whichever project that we are doing in Mumbai, it's all properly handled, properly tackled. So in the residential sphere, basically what will happen is it will be sort of self-sustaining, and we'll have enough cash flow coming in to see construction happens, and there's no stress on the cash flows. Yes, on the two CapEx projects, which is about 6 million odd square feet, which is the Liberty Tower, which is now we've rechristened it as the Prestige, and the BKC, unless we decide to sell certain portion of the area, the rest of it, there will be a lot of CapEx cost, where the cash flow, like Venkat said, that certain portion will come from residential surpluses, and the rest will come in the form of debt.
And, sorry, just to add, in spite of the inventory that you are mentioning about, if you have a right offering, good ticket price in terms of unit pricing, and pricing is reasonable, I think there is enough market for it. I mean, even this project when we are launching, there is enough offerings around. It's not that there is no development that is happening and we came and we launched a project. But it's about the design, the pricing, and credibility of the developer. I think there's a room for us to enter each of those segments, the MMR region market that we spoke about, and make our presence felt.
Second one is on the Bangalore market. Why do you don't think that Bangalore market's peak is behind us? For all the positives has been played out in last 2 years, like lockdown savings, or what young generation is having. Back to work has been done by almost all the ITS companies. Exceptional hikes is behind us. And increasing the net headcount from the IT companies is also behind us. Now we are listening that the net headcount has started going down again. So do you think that peak of Bangalore is behind us in terms of ITS especially?
A peak is behind us. So no, if you look at what has been driving the sales of Bangalore market, is not necessarily the lockdown savings and all of that. Ever since the RERA came into play or Demon came into play, the huge amount of supply consolidation has been happening. If you look at, I don't want to take the names, but the number of large developers, if they were to be 15 then, now it's boiling down to 5, 6. All large developers have come and given us lands for the developing their properties, who earlier used to go and bid for that land along with us, used to give their offers and take that land. And they are coming and saying, okay, we'll align with you, we'll bring more and more lands to you. And the supply consolidation theme, I think in the next 3 to 4 years, it will play out. Because our land providers now have become the financial institutions or the developers. Last 35 projects that we have signed in 2.5 years or so, almost around 70% of them have come either from the bank's financial institutions or other developers. Look at Mumbai. All of them from other developers and financial institutions. Land acquisition has become easier, and supply consolidation is playing. I'm reiterating, supply consolidation is playing, and that will drive the growth for next 3 to 5 years. I'm very confident. Let me give one more anecdote. If Bangalore micro market has got 40, 45, I'm talking about small micro markets, our presence is around 15, 16 micro markets, that's all. The rest of the areas is where other developers are clocking. Very seldom there is a competition of two developers launching next to each other. So if we can only increase our presence to the remaining micro markets within Bangalore, so we don't have offerings in some locations, our projects have become extremely successful, we don't have follow-on offering in those locations. We'll be able to get those numbers.
Thank you.
Hi, this is Kunal from CLSA. Venkat, in your cash flow projections, you've not factored in any strata sales, which we have spoken about in the past.
No.
So has the plan changed over there, or we would still look at doing starter sales?
We have assumed that whatever we are building in terms of office will hold. We have not factored in strata. If it happens, it will only help the cash flows further. Assume for a moment we are able to sell one block of BKC, example I'm saying. It will give you half of whatever the GDP we have projected. Ease up cash flows a lot more. This is, you are talking about optimistic scenario, I have given you realistic.
Sure.
Just to add, see, there's no cast in stone sort of strategy as far as office is concerned. There could be actual users who want to buy office. It could be investors, a startup, but it's a mix and match. Depends on each project, we'll evaluate it, and then it also depends on the requirement of cash flow. But the key bottom line is we definitely don't want debt levels to go up. We would like to definitely see the ease of cash flow is there. But of course, see, a retail mall I can't sell. I mean, in strata. A hotel, I can't sell rooms in strata. So basically, hospitality and retail malls definitely can't be sold strata. Maybe after the project is fully ready and operational, it's an option. But then we've sold one portfolio. This portfolio we want to create once again fully and operate it properly. And then the rest of it, how to monetize, it's left to us later on to decide, which is a 6-7 year later story.
Thanks. My second question was on, we are doing 40 million square feet of development in our office portfolio over the next 5 years. So how do you perceive
Sorry, I think the speakers are facing that's a little louder. Can't hear what you're saying.
Sorry, I've got a bad throat. So in terms of the office portfolio that we are building is 40 million square feet. And, going by like the leasing that we have to do in the next 5 years, that seems like a tall task, right? Considering like, going by the current run rate of less than 40 million square feet of net absorption, that's like almost capturing 20% of market share in leasing. How do you plan to achieve that?
I think I have the man for the office sitting here smiling. Why don't you come and answer that question?
No, I was laughing and boss saw me laughing. Typically, if you look at the office markets, our peak in 2019 was about 52 million square feet of gross leasing that happened. Came the pandemic 3 years, we came down to as low as 32 million. Last year, we're back to 50 million. So from a perspective of where we see the market, in the next 5 years, India office leasing market will be closer to the 75 to 80 million square feet. And that's the market that we're talking about. And when you look at the 41 million that we're talking about, of which 26 million is under construction and 15 million is on the planning stage where we are going to build another 15 million. I think we are talking about, to give you a small example, in Bangalore market, Bangalore has been leasing consistently between 15 and 17 million square feet year on year. Last year, calendar year, Jan to December, without getting a single new building OC in our own portfolio, that asset under management that we do all of that, we did 3 million square feet. So we are typically at about 10 to 12% of the market in a year where we don't have new supply. When we have new supply, that number can easily be about 20% of the market share. And that's what we're hitting in a market like Bangalore, which constitutes about 35% of the overall gross leasable scenario in India. So nothing to worry in terms of you build a great product, and Venkat's presentation was very clear. We are redefining a product. We are redefining the alignment to hotelizing our office spaces, using the best global consultants to build future-proof products. And like Mr. Razak also said, that we are trying to hold as many assets and buildings to go forward to create the net operating income of 3,000 crores. So we are well in skew for that. Thank you. I hope I answered your question.
Just to add to what Jaggi Marwa said, see, when a new asset gets ready, a new building gets ready, whichever market it is, whether it's Mumbai, Bangalore, Hyderabad, Chennai, wherever, the you see, there is always a sort of movement that happens. One is the new business that happens, expansion in terms of new take-ups. There are also the existing occupiers in different buildings. They'll be scattered in several buildings. They'll be having an old development. They'll probably want to upgrade themselves and also, expand some marginally. So there always happens that consolidation into one single building. So once they see a newer development, better development, and they believe that is the address that they would like to have. So that's what he meant by hotelization. What we now are endeavoring to do is create certain special and better developments so that people will sort of come to us. And that's the only way, because excellence is the only way ahead. And the location, there are two things. One is the type of building and second is the location. These two things count, whichever market you're in. And we are pretty confident. Believe you me, I cut to some in 1999 in Bangalore when we leased out 50,000 square feet. We thought we did something fabulous. And when it came to 100,000 square feet, it became amazing. And then one day Intel came and they asked us to build a greenfield development of 200,000 square feet. We thought we did the best deal of the decade. Now you came into 2000, 2001. Today we are talking of millions of square feet where the absorption is happening. That's the type of business that is happening today in the ITES space. And I believe that these cities, especially Bangalore, Hyderabad, Chennai, Mumbai, are growing. And India itself as a country, the amount of work that is going to come into this country is not yet conceivable, because the entire world is looking at us, and that is where the growth will come from. Yes, we have to have optimism. At the same time, we have to be cautious. So these numbers, what you say, now if you ask me if I'm going to pick up another 3 million square feet in Mumbai to develop office, the answer is a clear no. We are doing a certain amount of work in Mumbai, a certain amount of work in Hyderabad. Today, Hyderabad is overpopulated. There's a lot of supply. So we are just completing some 2.3 million square feet. And I believe that one will get occupied quite easily and without difficulty. But there are some actual users who are approaching us in terms of buy. Some people want to lease. Yes, there will be some stress levels going. It's not that it's going to be easy ride everywhere, every market. But each market is different. Like in Chennai, we completed a few buildings. Even before we completed, they were fully leased. So it's a mix and match. We cannot get worried and not build. We have to build, but we have to build the best in the best locations. That's how the answer is.
It's an important question, just to add up, in Bangalore market, the number of people who are providing grade A office building also very limited. Very limited. It boils down to 4, 5. So 20 to 25% of the capturing share of that market is not difficult. When we presented the slides about residential, office, retail, hospitality, the point that I want all of you to note is, it's not that we are doing just higher sales in the residential. We are market leaders in office market. We do as much and more of any developer who does only office, not do any residential. Our presence in the retail segment, if you had looked at pre-Blackstone deal, and including that, we would have been probably the largest number of malls, if you look at mall owner in the country. Even the hospitality, if you look at, it's not a mere presence. Look at the number of the rooms. So we are leaders in each of the segments. So a market leader in each segment to capture 20-25% of the market share with the new offerings to coming and different locations is not a difficult thing.
Sure, thanks. And one last question from my side on the resi. In FY22 we had Prestige City, Bangalore. In 23 we had Mulund contributing significantly. So the sales were largely concentrated because of a couple of projects driving the sales for that particular year. How should we look at FY24 and beyond going? Do we have such large scale projects which can drive the sales, or or the sales will be largely broad based going ahead?
No, we do have Bangalore itself. We've got a lot of development coming up in good prime locations. I think the latest approvals that are coming in, which we had launched, again, it's a question of today, I can't launch anything without the complete approval and the RERA. So now I've got Prestige Lavender Fields, which is about 1,500 apartments. and Prestige Serenity shows which are approved in the BDA. The development plan is there, but I need to get the BBMP plan and the RERA number. We are trying hard to see we bring it for this quarter. If that comes, it will boost up my numbers in Bangalore. Then I've got Prestige Park Grove. Even there, the development plan is approved. But the building plan still has to get done. Bureaucracy and the government doesn't work at the speed at which we want them to do. But these are all plans which we've been working over the last 3 years. Land is already in place, concept is in place, the entire planning is done, and we've come into that last leg of approval. So 24 in Bangalore, we've got many projects coming up. Similarly, Hyderabad, we've got the Prestige City, which is almost 5,000 apartments with about 200 villas. And that's again going to be a number mover. And even Chennai, we've got Pallava Gardens. Chennai moves extremely slow. I think there again, we were hoping to get it this quarter. It's not going to come. Probably it will come the next quarter or the quarter after that. And so also in Noida, we've done the CEC, we've done the show units. It's all ready. But approval has taken time. There are some issues. We are trying to resolve it. Hopefully it should come in the quarter or so. So there's a big pipeline in all the cities that we are working on. Yes, we don't want to have a situation we've got too much inventory, or we don't want to have a situation where we have no inventory. Like today in Bangalore, I've just in completed stock. I think we've got the lowest inventory, which is about 173 crores, which is nothing compared to the scale of operation which we are doing. And just launched project is about 350, 400 crores. There's hardly any inventory in Bangalore. If I don't get the new projects, we won't be able to achieve those numbers, but we're going to get them. 12,000, yes, we are very confident of clocking that. We've already clocked 10,000. And March 31st, we should do 12,000, but we could surprise you with a little more if the approvals do come and the launches do happen as planned.
So just to add, Kunal, if FY22 was Prestige City, Bangalore, FY23 is Prestige City, Mumbai, FY24 is going to be Prestige City, Hyderabad, FY25 may be Prestige City, Goa. Prestige City will come to all the cities, and that will be anchor for that year. And we have enough Prestige City. That's why we mentioned key takeaways, Prestige City as a concept to all cities.
Sure. Thanks and wish you the very best.
Yeah, give the mic there, please.
Hi. Hi, I'm Saurabh from Matla Doswar. So, you have laid out a very aggressive plan on residential segment also, that we are planning to double our pre-sales from 12,000 now to 25,000. So what is sort of giving you the confidence that the momentum will sustain? Like you had a very large project which contributed in last 2 years, but then we also have a pipeline which you laid out. But from demand perspective, how confident are you? And in addition to that, like how do you maintain that the underwriting of new projects is, from IRR perspective, it's, the threshold is met and it's not diluted in pursuit while pursuing the growth?
Not diluted by?
I mean, from IRR perspective, given the aggression that we are, pursuing, how do you make sure that the internal threshold is met?
Margins are maintained. Okay. Now see, two things. So today, because of so much of regulatory, including RERA, apart from the market itself expanding, there's also a consolidation that's happening. Now, why does a Prestige sell more than anybody else? It's only because of the past track record and the delivery that we've done and the confidence that the customer happens. So if Prestige does launch a project, there are just about a handful of developers who can command that same respect. So what happens is we get the advantage. We get the business and there is enough buyers for our product. So reaching 25,000 crores, I believe it's not at all difficult. It's very easy. We have to strategize this. We have to have the product. See, without inventory, I can't sell. Like in Bangalore, without the inventory, we are still born. So we need to have the inventory, the right location, the right product, the right offering on the price. Now, the very good point that you brought up is, in quest of top line, are you sacrificing the bottom line? That debate keeps happening internally also. The question is, while we look at the top line, the most important part is the bottom line also should be completely protected, and internally all our guys debate this properly. We work out our costing properly, land cost, construction, escalation, interest, overhead, whatever that comes in. And we make sure that the pricing is priced in such a way that it's not completely unaffordable to the buyers, but at the same time, we make sure that the cost is controlled in such a way without wastages, that the bottom line is always protected. Yes, we've had some, EBITDA margins have always been historically between 25 to 30%, a little more than 30%, but the PAT margins have always been single digit. Now, I can't promise that it will be better than that, because if I'm looking at PAT margins of 30%, the sales won't come. If the product that here, like Prestige City, Mulund, if I price it at 40,000, there are not going to be any takers. I also have to look at what's happening in the market, what others are selling. My product probably will sell for 10-15% more than what others are selling in the same market. But at the same time, we have to give a good product, timely delivery, and make sure the pricing that we price at is sensible. Yes, customers do buy from us. After the project is completed, 2 years later, 3 years later, the price is 3 times more than what we've sold, but that's their good luck. And that's how business keeps coming back to us, and that's the confidence. I mean, that's part of business.
In terms of growth, we also looked at the data and arrived at where can we head next 3 to 4 years. With the expansion that we have done, being Bangalore-centric, and captured and done good numbers in Hyderabad, Chennai, and most recently Mumbai, our ability to expand and make our presence felt and have sales, I think that is, I hope you're all now confident as we are, that we'll be able to comfortably expand to other cities, given our approach and given our value system. Overall, the number of units that got sold in the last calendar year, if you look at, little over 450,000 units on all the significant markets. We are talking about doing 3% of that in those cities. Maybe if we get to 4%, we cross that number. That's all. Very realistic numbers we have kept. All that we need to do is add to our offering some more micro markets in existing cities and enter 2 new cities which have got potential for the real estate sales. So we're looking at that much only. In fact, there's a lot more that can be done.
Another thing that we do is we look at some new concepts all the time. He mentioned Goa. I don't think Goa is on the slide anywhere. It's not there because it's hidden, camouflage in the land bank. We've tied up some great land in Goa. We've got the support. We are doing a concept. We're doing some assisted living. We're doing a golf course again there and some recreational villas, holiday homes and plotted development. I think plotted development should give us instant cash flow even there. That's another market that suddenly plotted development has come of age. There are many, there's a huge opportunity for plotted development. And we used to do that in the 90s, early 90s, and I said there's no value addition, we stopped it. And then now, in the suburbs, in every city, whether it's Chennai, Bangalore, except in Mumbai, you don't have land at all in Mumbai to do plotted development, but everywhere else, there's huge opportunity. Hyderabad, we did plotted development, it's met with huge response. And it just gets sold off within not even weeks, in days. So that's an opportunity we've learned, and I think we are mastering that also, doing a good job. So, see, to do business, there's potential. And while we are doing it, like you rightly said, it's not only the top line, we have to make sure even the bottom line is protected. And most importantly, while we are doing on it, we are definitely not going to depend on too much debt to do all this. We'll try and work in such a way that, especially in the residential business, I've kept repeating it everywhere, we have no business to have debt in residential business.
Yeah. This is Mohit from IIFL. Thanks for an exhaustive presentation. My question is, on your commercial projects in BKC and Mahalakshmi, can you tell us what is the share or what is the share of commitment of the SRA partner, and where is he right now in terms of, fulfilling his share of commitment?
Share of commitment in what?
Yeah, I mean, what is his responsibility as in, clearing the site, creating, so I'm trying to understand where is he in terms of doing all that.
Okay, very good question. And I think I'd like to clear the air on this completely. Now, let's take it step by step. Now, first, let's take BKC. When we did a shake hand on BKC, I asked Venkat, what are we doing? Honestly. But then he said, these are all my CPs. Now, what were the CPs? That entire site had some 900 or 1,200 tenements over there. You couldn't step into that plot. Then there was those two financial, ILNFS and Trinity were sitting there. Today, there's no ILFS, there's no Trinity, and then the site is absolutely flat. It's clear, clean ground. And the fourth point, responsibility was his to get the entire approval. The cost of the approval was our partner's responsibility. So what did he do? He cleared all these four things, and all these four things were at his responsibility, what was at his cost. Our cost started only with construction. And we had to give a X amount of money, that is 300 crores on either of X and Y, 300 plus 325 crores as an entry cost. That was our non-refundable deposit. As we went along, we saw that if we didn't support, this project will be stillborn, it will not move. So what did we do? We took a calculated risk. We kept funding him because he didn't have the funds. That was all at his cost. Initially, we said, we're going to charge you. Then finally, we said, this is not going to be secure. So we have now taken space against the money that we have given. And now our job starts now in terms of construction. So whatever money that was paid, apart from that 300 whatever commitment that we did as part of our deal, and it was a 50-50 on development, 50% of built-up area was our partner and 50% was ours. And now it happens that since we have funded for A, B, C, D, which was our partner's responsibility, we've got more space, and that's how Venkat says our share in that project is some 75% or 80% or whatever that is. Similarly, you come to Liberty Towers or The Prestige. Even there, land was leasehold. To convert from leasehold to freehold, payment had to be made. So that was his responsibility. Secondly, it was a project which was launched as a residential project. He had customers. He had to clear the existing customers. Thirdly, again, premiums and your approvals, the entire responsibility for his. Now, both these projects, the approvals are in place, premiums have been paid, everything has been done. Project, both sides, we've started broken ground. And then, of course, in the Prestige in Mahalakshmi, we also had to build a rehab tower, which was Tower D. Now, it was greenfield. Today, we've come to some 10th level or 12th level. And from there, I think this year end, we'll complete that building. Even that cost, 50% was our partner's cost and 50% was our cost. And work is going on at full speed. Even there, we had to do the adjustment on the space because the liquidity. So basically, what we did was we provided liquidity. Fortunately, we did have the liquidity without getting into debt. And now we have to sort of mix up our debt equity ratio as we go along. And I think we're pretty confident of doing that. And if we do sell some space in either BKC or in Liberty Towers, which we have not, many people are knocking on our doors asking us to sell. We are holding on, and if something good really comes up, some transaction happens, then it's all free cash flows. That's the total sum and substance of the entire transaction as far as office is concerned with our partners. So there's nothing else that we are doing with them.
In terms of equation, just to summarize what Chairman said right now, we had a lot of CPs when we entered into transaction for both BKC as well as Liberty Towers. Now, net, as we stand today, what is outstanding deliverables from him is one, at BKC, a rehab tower need to be built at his cost, which will be roughly around 200 to 250 crores. A rehab tower that need to be built at Liberty Towers jointly by both of us, which is at 10th floor right now. These are the leftover deliverables that need to be done from where we started to where we have come. So there is nothing else that's outstanding.
Okay, so that's very clear. So my second question is, you mentioned about your investments in warehousing and data centers, but I guess you haven't taken it anywhere in your estimates in terms of capex or even in terms of revenue. So what kind of plans do you have, and how big this could be, let's say, in the next 5 years? What kind of opportunities you see that in that segment?
We have not taken in the cash flows for sure, but if you look at the allocation of free cash flows, 40% has gone for commercial capex, 40% has gone for business development residential, 20% if you look at has been kept for other opportunities and contingencies. If we were to pursue, those cash flows will go there. As we mentioned, the logistics and warehousing is low margin game. It's more about keeping land for the future development, which will yield also, and tomorrow it can become a good residential development. So, I mean, given the opportunities that we have, deploying in high growth markets versus low yielding warehousing, we've not been able to find a strategy. Having said that, we have one warehousing project right now operational. Data centers, we are still evaluating as of now.
Just to add on the data center, I mean, that's why, again, Jaggi is getting a little nervy, because we've just now closed a transaction in our Prestige Tech Cloud project. We had some land which we had set as phase 2, and now we've signed a data center. It's a signed deal. It will come into the numbers probably this quarter, where we are not building and leasing, we are building and selling. So it will give us only positive cash flows, and it's a good transaction that happened. It has a two-pronged effect. One is that Prestige Tech Cloud per se as a project, there's some occupier and people are already in there, and we have to complete this project in a calendar year, I think in 12 months' time. And we need to see that the power, because the biggest thing in a data center is not the building itself, it's getting the MEP, like the power connection, because there's huge guzzlers of power as far as data centers are concerned. And we are evaluating 2 other sites where we've got some people who are interested for us to build for them. So it's a big game. Like Venkat rightly said, warehousing, it's a 22, 23 rupees square foot margin, the rent. So it has to be a low cost land and a low cost development. Still, we need to get our 15, 18% yield on cost. So we are working on that. We've got a couple of sites already tied up, and those will come to fruition soon.
Thanks, sir. That's all from me.
Business for us, build to suit facility. We're not operating data centers.
Okay, understood.
So, any more question, or shall we wind up? One more, okay.
Hi, sir. This is Parikshit from HDFC Securities. So this is Parikshit from HDFC Securities.
Hi, Parikshit.
Yeah, so my question is on commercial office. So we have about 11 million square feet to be leased in Mumbai in the next 5-6 years, including the partner share. So we have about 20 million odd in Bangalore. So how far are we in signing the first lease deal in Mumbai. So if we can give some color on that.
See, it's not 11. We've got 6.6 million square feet in Mumbai, BKC and Liberty Towers. 4.4 million in BKC, 2.2 million in Liberty Towers, that is Mahalakshmi. That's a rentable area. I mean, the developable area will be much more, which includes the car park, basement, but leasable area is only 6.6 million. And the rest keeps Bangalore, Hyderabad, all of those are there. Now, the good news is, even in Mumbai, we are getting a lot of inquiries. Even at this stage, you've seen the pictures, it's just we are still in excavation stage. It's a 4-year window or a maximum 5-year window when all this will fructify and really be shown to the Mumbai market. People are interested where people are looking at actual occupiers. They want to buy and they want to occupy. And typically leases will not happen at this stage. If somebody wants to buy and have their own office, yes, then they make their changes also and they sort of becomes tailor-made for them. But the leasing probably will happen when my structure is sort of up the ground and it's visible. And that's the time the action happens. But having said that, there is a huge interest in Mumbai. Bangalore, it's an ongoing thing. It keeps happening all the time. And I don't see any problem. I already talked to you about what's happening in Hyderabad. And the most difficult market for me today is Hyderabad. Let me be very honest. Though fortunately, we don't have too much space there. It's 2.2 million square feet. And, but even there, I'm pretty confident from the time we complete to the time we lease, it will be probably a year.
So my second question is, this year Mulund has been our star product. So in terms of business development pipeline in MMR in Pune, so beyond the traditional central Mumbai and the South Mumbai, so how are we evaluating other markets within this micro market? So if you can give some sense on that, even in Pune, how do you think could be the opportunity for us?
Actually, that's why you heard Venkat say we are looking at suburbs in Mumbai, like Andheri, Thane, maybe all other around, because I recognize the fact that to sell a 80,000 square foot unit or a 1 lakh square foot unit every day, it's not possible. Because again, affordability, when I say 80,000, 100,000, it means also 25 crores, 30 crores. It's you know, what's the affordability? How many people can afford that? But a 2 crore unit in Mumbai, 2.5 crores is the sweet spot. Maybe if I can bring it down little less than 2 crores, the velocity will be huge. So that we are evaluating, that we are looking at definitely. And we've got a fair share of the premium projects, and I don't think we're going to touch another premium project till we launch what we have in our kitty and till we start building it and till we sell those. See, we've got Pali Hill, we've got Worli, we've got Marine Lines, and also Jija Mata coming up, that's also in Worli itself. So these will consume the high-end market. We get, every day we get many offers, whether it's in Bandra or wherever else for redevelopment, which we are now staying away from. Now, if at all we tie up anything in Mumbai for residential, it will be always in the suburbs. That's the only way to do it, because we don't want to be skewed. Definitely not top-heavy or the very expensive project, and then when the market changes a bit, that's the first one that gets affected. We've recognized that whichever city we are in, whether it's a Bengaluru or a Hyderabad or the very expensive ones sell, but they sell slowly. They don't, in my own experience, we did Prestige Golfshire in Bangalore. 2008 we launched it. Now we are in 2023. Number of units, 206. COVID helped us a lot. Price went up, of course. But today I'm happy to say Golfshire is fully sold out. We don't even have one single unit, and now across the street, we had some 22 acres of land. We launched something called Prestige Sanctuary, 85 units, more than half is sold. Now it's a mindset. It's a people's acceptance of a location, people's acceptance of a price. But high price, yes, it is uphill, but the regular stuff between, say, if I'm in a Hyderabad, 1 crore, 1.5 crores, Bangalore, 1 crore to 2 crores, it's an easy seller.
Just the last question on the AIF. So any update on that? Have we got any commitments there? How big could that be for us?
So when we were in discussions to raise AAF, one of the partners that we looked at was ADIA. We had discussions with them. As you know, ADIA doesn't have office of their own in the country, and they operate either through HDFC or through Kotak. So their thing was that we have signed a platform with HDFC, and we have deployed only 10% of it so far, and the balance has not been deployed. And similarly with Kotak, we have an understanding, and maybe we will announce it in Q1. Again, ADIA working through Kotak. Next 3 to 4 projects we would be doing in a platform with them, where they will be capital providers. Large transactions, one in Chennai and one in Bangalore, and 2 in other different cities. We are in advanced talks. They also have looked at the land parcels. So once we exhaust this money, and then we'll look at doing something on our own independently. Right now, we're working either through Kotak platform or HDFC platform.
And how much of the capital is still pending to be deployed in these 2 entities? So with HDFC and Kotak?
2,500 crore platform that we signed with HDFC, we've made use of them to the extent of 300 crores. The balance is available. Right now, we are talking about, again, $500 million equivalent platform with Kotak. So we'll deploy that capital.
Thank you.
Thanks, everyone. Thanks for the incisive questions. Thanks for the interest. Thanks for having come over and spent this time. I do hope that you've got a better insight at what we're doing in the company. And we'll keep doing our job, I think, dedicatedly and, of course, delivering to our shareholders, delivering to our customers. That's been our focus. And you've been supporting us by writing about us. I hope the market understands what we are doing and also is able to appreciate that. Thank you. I think if any of you are interested in looking at the site, our team is available. Not only this site, any other site in Mumbai. And I think with this, the lunch also will open. Thanks a lot.
Thank you, everyone. And
please do join for lunch. Don't go away without having lunch.
Thank you, everyone. I just want to place it on record. The purpose of this meeting was because we've been getting a lot of questions. Some of you have been interacting regularly, been writing to understand our presence in Mumbai and where we are heading from here on. To interact with you, explain to you, and to showcase as to the kind of scale of operations, the value of work that we are doing, and how are we trading compared to any other developers, and the valuation upside the stock holds. We didn't derive the numbers and give it to you because all of you are intelligent. You can derive, you can do DCFs, or you can do NPVs and do sum of parts, each of the segments, and see where we stand compared to current market cap. Probably 3-4 times is where we should be at. I leave it to you to do your own the computations, but this is what we are doing. And most importantly, I had to place it in record that we're not looking at raising any equity. So this analyst meet is not as a push for raising of equity. We're not looking at raising equity. It's more to help you understand what we are doing. Thank you very much. Kindly join us for lunch.
Thank you, Irfan sir. Thank you, Venkat sir. Everyone, thank you for your participation, rather an active participation. The lunch is ready. We can proceed for the lunch. Our sales team has also organized the site tour. Abhinay Saxena is here. Abhinay? Yes. Okay, so please feel free to approach Abhinay. We can do it in 2 parts. We have the site tour organized even before lunch and after lunch. So please do this as per your convenience. Thank you so much.